Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CONOCOPHILLIPS quarterly report. ConocoPhillips offers a diverse range of businesses and services, including exploration for crude oil and natural gas production and transportation of various energy products, marketing of crude oil, bitumen, LNG, and natural gas liquids operations in 6 segments. Alaska, Lower 48, Canada, Europe, Middle East and North Africa, Asia Pacific, and other international. The company's portfolio includes unconventional plays in North America, conventional assets in North America, Europe, Asia, and Australia, global LNG developments, oil sands assets in Canada, exploration, prospects worldwide. The ConocoPhillips stock price dropped by over 21% in the past year due to a combination of factors. The completion of the Marathon Oil acquisition in November 2024 led to a 5.1% drop in shares, as investors expressed concerns about dilution and debt impact. Weak financial performance and macroeconomic uncertainty also contributed to the decline, with ConocoPhillips Q4 2024 results showing decreased adjusted earnings per share and revenue. The analyst downgrade by Bank of America Securities in April 2025 further exacerbated the decline, citing a softening macroeconomy and OPEC's lack of cohesion as risks to oil prices. The broader decline in oil prices throughout 2025 also had a significant impact on ConocoPhillips earnings and cash flow, with adjusted earnings declining from $2.7 billion in CON 2025 to $1.8 billion in Q2 2025. Additionally, the company's decision to cut 20–25% of its global workforce as part of a restructuring program aimed at cutting costs led to a 4.7% drop in shares on September 3, 2025. These layoffs continued into October 2025, specifically impacting Canadian operations. Overall, the decline in ConocoPhillips stock price was a cumulative result of these various factors, which collectively contributed to a challenging macroeconomic environment and declining oil prices. The primary drivers of revenue growth or decline are largely influenced by external market factors. Volatile commodity prices have a significant impact on revenue, as fluctuations can either boost or hinder earnings. Additionally, changes in global demand, supply, and regional market conditions also play a crucial role in determining revenue trends. Furthermore, the success or failure of oil and gas developments can significantly affect revenue growth or decline. These factors are interlinked and can have a ripple effect on an organization's financial performance. Net income and profit margin changes. A shift in financial performance, the net income of the company underwent significant fluctuations over the periods analyzed. Initially, there was no change from $75,186 to -$6,074, page 4. However, a substantial increase of $2,059 million was observed on page 5. Notably, by page 8, the net income remained stagnant at $6,939. Profit margins also experienced changes during this time. On page 4, despite a stable revenue base, profit margins declined significantly. Conversely, on page 5, improved profit margins were attributed to increased retained earnings and decreased treasury stock. The company's debt level has shown a slight decrease over the past year. According to financial summaries, the debt balance dropped from $24.3 billion at December 31, 2024 to $23.5 billion at September 30, 2025. Additionally, total debt, excluding finance leases, decreased from $23.38 billion to $22.88 billion over the same period. This indicates a reduction in the company's overall debt level, but no significant changes have been noted in interest expenses. Management is optimistic about the company's outlook, expecting production growth and a favorable business environment. They plan to support this strategy through increased capital expenditures and the acquisition of Marathon Oil, which will bring synergies. Additionally, they intend to deploy net proceeds from asset dispositions in a timely manner. Furthermore, management aims to continue executing their capital return program, demonstrating confidence in the company's ability to generate returns for shareholders. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In the financial summary, it is clear that dividends were declared on multiple occasions, with specific amounts noted for ordinary and variable returns of cash. Additionally, the company engaged in significant share repurchases, purchasing over 13 million shares at a total cost of $3,000 $996. These actions indicate a focus on rewarding shareholders while also reducing the company's outstanding share count. That concludes the financial summary for CONOCOPHILLIPS. Feel free to comment below, and I will be happy to answer them when possible.